right, Elliott Devils, here we go. Friday it is. Hope you're doing well. All right, we got some challenges here. This is quite the puzzle here with Bitcoin. So let's just dig into it here. I'm going to stick with majors mostly. Right? Bitcoin is, well, it's what matters most in crypto, of course. So now I've got two counts here. I'm starting to lean more towards this count here, which is a bit more traditional. This is the count we looked at last week here. This was, again, very unpopular. It's rather unconventional that we went 1, 2, 3, 4, 5. I did it like this. Granted, for all the, got a lot of hate comments on that. Very atypical, right? It is valid. It's yes, but it would be surprising, right? It's the whole premise is trying to look for a way to have this be completing a 1 and this be our key pivot. You'll note I have invalidation down here at 49 and change. Based on the new price action that we're seeing now, I'm starting to lean away from this count. Now it's still a contender, right? So it's always a good idea to have a couple of different counts when the market, when it's not clear what we have here. The big hurdle we have here is that this last little this bit of price action we have here certainly looks corrective, and then what really is kind of a negative here is that the ETF net flows are indeed negative, right? So until that starts to turn around, my inclination is that we're likely to be pursuing this low down here one more time. Now we could still finish this here, hold the golden, and this could still be a 1-2, right? Again, it would be unusual, but technically valid, right? So let's put this aside since I spent last week focused on that. Let's go over to here now with this price action. I'm certainly not so arrogant that I'm not able to adjust my counts. Right? And any count is always an estimation based on the most recent price action here. So I'm quick to add additional counts if I need to. It's certainly based on the price action here. Now I have this highlighted here because this is where this puzzle gets really interesting, right? Now, if you're, an Elliottician, you're likely drawn to solving the puzzle. I mean, that's half the battle, right? That's the technician within you, right? Not the trader. That's the technician within you trying to identify what we have here. And this here, let me take this off for a second. I'll pull that back again. This is the section I think that's going to dictate how this ultimately unfolds. We've been over when we do this, right? So 22. We've been over this count, many times. It's unclear, which makes it challenging. My view is here that if this section indeed is going to hold as a 2, which, where are you putting the 2? That becomes the question. So I think it's a cleaner count, right? Again, it's my opinion. I think it's a cleaner count to have us putting the, what is that? 58.7. That we do here. Let me zoom in here. That we do it this way. Now we've had this count up before. That we went A, B, C into a W. A, B, C into an X, and that we finish this with a triangle, A, B, C, D, E, which puts your pivot too low here. Also, atypical, unconventional. The reason I lean to this is really based on this price action here. I think it's too much of a force fit to try and get this into a 1-2. And then yet again, you would have to go 1-2. You're ending up with more 1-2s than in my opinion, the price action supports. It's a finish. What am I trying to say? It finishes more cleanly here with your Elliott hat on to put the 2 here and have this finish as a Y in a triangle and then go into 1-2. It doesn't get any easier up here because all of this chop still quite challenging to get a clean read on that. It does look like you've got a diag here to finish the 3, and then you're going into an ABC to get your 4, and then straight up for that 5 to give us the 3 here. So this is a difficult count. There's no question about it. Now you will note here I'm at a log scale. I'm just an arithmetic because where this gets really tricky now is where you're pulling from with regards to projecting for the 3rd. if indeed, right now, the thing about this count, right, just to quickly, again, I like to use the, if you brought up, well, let's call it a seventh grader and said, okay, show me the swing structure, right? Likely, we'll put it in here somewhere, right? This is what you're going to get, right? I mean, those are the obvious swings here where we get, let's call it impulse, retrace, impulsive, right? So price discovery, correction, right? The whole idea that we've talked about the last couple of times. Well, this is where this gets tricky. If this is 1 and the 2 is here, now let's measure, right? So from the length, from the proposed low to the proposed 1 high to what I think is the cleaner finish here, to get that to be my 2. 3's shorter, right? We don't make 100%. So then immediately what you would need to do is say, well, okay, well, the one thing I know is that 3 can't be the shortest. So how do we relate to the proposed 5th? Well, let's do it. So if I take this as my low here, I want to get right on it because this is really tight. If I go into that is the 3 and this is my 4, get right on it. We just barely clear it right there. Now you look over here and say, well, what about that? Well, first, right, we don't get a close up here. So this is likely a liquidity grab. Stops being run before that goes down, right? That's a reasonable assumption to make here as we look at that. It's also with regards to market structure. If you're disciplined with market structure here, you would not allow for this to be a break of structure because we don't get a close above the pivot. So actually the last break is here. Oh, let's see if you put a market structure on here that I like. Oh, come here. Where'd you go? Hang on. Sorry, I hit the wrong button. Last break of structure is right here. Here's the last break of structure where we get a clean break of a significant pivot, right? We broke here, came down here, then broke this pivot. Here's the retrace. Here's the next break. We don't get a break of structure here. That's a change of character. Should we go up here and break that? This would not be a break of structure because it didn't break up. It didn't retrace to a significant low to create a break of structure. So the last break is right here. So this finishing here as a 1, 2, 3, 4, 5 is reasonable. Let's get that out of there just to make that point. Okay, come back here. This is what I was trying to get to. I hit on the adaptive trend, but they both start with an A. Okay, now this is, I mean, we're really cutting it very close here. I mean, that's within just a few bucks, right? It's really, really tight. So, how much, I've got to get this right on that. How much a purist are you, right? Would that be acceptable to you, right? For this to be holding as the 3, very tricky. Now, if you take it from the absolute low here, right, from the proposed, because this is how many are counting this, that we went W, X, Y. It doesn't matter, right? This is the lowest low before we launch. Well, first, right, the start here is so right. It's just dirty, right, Elliott, right? So you're going to do a 3. ABC, it doesn't fly, right? You're forcing it. I know. Oh, that's the lowest low before. It's just not clean, right? That's a 3. That's a 3. Maybe you got an impulse here, but then you're gonna put it here. So you're gonna go 3, 3. Right? It doesn't fly. But note the difference here. If I put this as the low and we just allow for this slop here, well then now the 3 is longer. And this doesn't matter, right? Because 3 is longer, so you're okay there. Very, very difficult to get a clean read on that. So now what's influencing, at least my thinking here, is what's happening over here on the right side. So those are going to remain a question mark because technically, right, it's just a question of your judgment here. I do think that's the cleaner count, right? Feel free to disagree. 3, 4. This is very deep for a 4, which is back to some of our original thinking was, hey, that's too deep for a 4, right? I mean, if this is the 2 here and we're going through the golden zone. Now, granted, we don't overlap the 1, but that's uncharacteristically deep for a 4. it has me, pausing there, right? That's what would make you think, well, wait a minute, that's not a 4. Again, regardless of where you started here, the premise would be that's a 1-2. Well, then you're thinking, right? Then this has influenced the thinking, right? As we've approached, got into this retrace here, which has now gone deeper than perhaps anticipated, that you might have been thinking 1-2-1-2, right? And we looked at that count over the last couple of weeks. That's been a count we've considered. All right, new price action here, right? Adjust your thinking. This is going to be the key to how this is counted, what ends up ultimately being the most valid count here, based on how far are we going down, how far are we going up. So that remains to be seen. But just to understand the thinking, because any Elliottician, or student of Elliott Wave is going to be struggling with those same issues, right? So just to review the thought process there, as it sits here now, if we allow for this, right, where the next bit of this where are you? That gets really open to interpretation is what we're doing up here. There is really, I don't think there's any disagreement about the fact that this is an ABC into something here. Now, what did we do there? Well, there's a couple of different ways you could interpret it, right? It could be an A, a B, and we're doing a C. It could be an A, pardon me. It could be let's get this out of here. I suppose you could consider one possibility here. You're going to squeeze it to get this into a 3. It would be a WXY. Okay, maybe, right? If we're finishing here, that certainly looks like it's more of a 5. If you break that down a bit, it looks like it's a diag. 1, 2, 3, 4, 5. It looks much more likely to my eye, right? Again, right, that's what makes a market. I would label this, and I think again we've done it before, as this coming into that for the 5, right? So we get an extension in the 1. Here, let's take that down. We get an extension in the 1. 1, 2, 3, 4, 5, right? So we get a tight little diag here to give us an A. Well, again, this, hard to interpret that as anything other than impulsive. So that would lean you into an ABC. So we expand the B, which certainly we can do. You can see the liquidity grab up here, right? Just as we had it here. We have it here. Same idea, right? They sweep the highs, right? Take it down, sweep the highs, take it down. So as you look at that, that would make that has me leaning towards an A, B, and then coming down for the C. And the C is, I think, becoming more valid based on a couple of things we see now where we are. So again, no negative ETFs, right? That's not good for the bull case here. Well, in the short term. Now, how are we going to count this coming down? Well, if that's the A, that's the B, we're looking for the C here. Now, let's be mindful. Oh, let me go to a 4 here. Of the key. Oh, shit. I'm going to have to do it on an 8. Of the key levels that we're after here. Right. Now, this is where every major invalidation. If we break below that, then we are likely correcting the entire impulse. Any idea that we went 1, 2, 1, 2, right, is off the board, right? Which is, okay, it's not necessarily the worst news because it gives us some clarity. Get this out of here. Sometimes, right, it seems counterintuitive, right? It's not that I want the market to come down. I want clarity on where we are. If this sweeps lower and we're heading for the 5 down here to complete the ABC, okay, at least I'm going to have a better idea of where we are in this entire in this price action, in this Elliott count. If we hold here as the 5 and this is AB, then we're looking for a clean impulse to come down. And so far we've got, well, it's not a bad looking one. Let's go to a 3 hour here. Now, a couple of things have happened here that have me leaning more towards this count. I think we all agree here, most Elliotticians or students of Elliott Wave would see hard to argue with the 5 here, right? 1, 2, 3, 4, 5. So we get a 1. We get a let's see, a technical retrace here, right? We're in the pocket here. You see the big imbalance that, right, I'm sure you've all seen this, right? So we have this big fair value gap here. This imbalance. Pull that up a little bit. We get this big imbalance here. The market comes back and taps into it. And then we get the big rip coming down. Now this also, it's tricky here. 1, 2, okay, that makes sense. 1, 2. 1, 2 makes sense again. Now it looks like we truncate here. It looks, yeah, I think I've been over this a couple of times. It looks like, because there's a 5 that finishes here, but it doesn't quite sweep that low. 1, 2, 3, 4, 5, A, B, C, into the 2. This looks like the most reasonable count to my eye, that we have an impulse that completes here despite the little truncation. I mean, it's very, very, very subtle, right? It's just, just a couple of bucks. Same as up here, right? That as we were looking at that 100, it's really, really tight. So 1, 2. Well, your next thought would be, okay, well, if that's 1, 2, right? How am I going to finish? Where this is the next section that becomes a little bit controversial because it's not easily identified. If we go 1, 2, 3, well, let's measure it, right? So when in doubt, measure. So let's use that pivot. Come here. Well, we're just long enough here, so we don't have to worry about 3 being the shortest. But it's the relationship in time and the price action of the 4 relative to the 2. Now, it's not like we haven't seen that before. It looks like you'd have to do it through an A, B, C, an A, expand the B, up for the C, into the 4. That seems to be the most reasonable count, if indeed we completed here. It's not that clean. If I do it this way, if we take 1 here and then we look down here, well, I'm kind of in between. Oh, I'm just shy of making the 1618, which again would have me leaning towards putting the 3 here. But then you have to work backwards, as is often the case with Elliott Wave. We're going to work backwards and say, well, how do I get an impulse into this? 1, 2. Well, if we label it, right? So it's going to be 1, 2, 3, 4, 5 into the 3. Looks reasonable. Big 3, tiny little 4 here, down for the 5. So then we're dealing with this as our 4. Down for the 5. Okay, so now we come back this direction. Okay, so now we start looking at that. Well, wait a second. If this is, let's get this out of here, and we've established that. If this is the 2 to the 3, well, you can see I've already drawn it. Well, where's the highest probability location for a wave 4? Between 23 and 38. We hit the 38 to the tick. Now, there's one other little bit of price action here that is very intriguing to me, and that is a common relationship we see between looking for confluence with the 2 and the 4. I put this right on it. Well, there's the 100%, the length, give me here. 100% right here, the length of the 2 projected from the 3. So we have this nice little confluence here, and you can see a couple of things that have happened here. So here's the 100% of the 2. I'm assuming I don't even have to do this, right? But there's the liquidity grab right there, right? So we run the stops that were sitting right there. I'll take this out of here since we've established that now. So you see the grab of liquidity here. You can actually pull it over. So this is likely an order block here. Well, we have this imbalance. Let's see. So let's put it over here. We've got a couple, right? So there's one. Oh. There's an order block here. So why am I using this? Because of the imbalances that came off of it, right? So here's the up before we go down. We left some imbalances here. So this is a reasonable spot to be anticipating. We get a reaction again, 38 to the tick. Very, very close, within a few bucks of 100% of the 2, right? So you've got a lot of evidence here to support the idea that looks like a good place, at least at this moment in time, to put the 4. I mean, again, it's 38 to the tick. Right, would make you think, oh, okay, pretty good. Now there's the 200. That's the God EMA, or the God MA, I should say, right? Average of the EMA and the SMA. Okay, so now where are we headed? Well, now remember, this is our key level here. Let's go up a bit from that. Now, on the assumption that we have this correctly labeled here, that is the 4. Well, let me change that color just so we get some alternation here. 1, 2, 3, 4. Okay, well, again, standard Elliott. What we do is to length of the 1 from the proposed 4. Well, 100% would be the most common target. Well, let's back that up now for a second, see where that would land us. If we're putting it here, we're overlapping this 1, which eliminates, right? So this is why this is not necessarily bad news. It eliminates any possibility here, well, certainly that the 1, 2 idea is off the table. 1, 2, 1, 2, right? Same thing, off the table. So really what that's going to do, if we come down here and we break this, and we break this pivot, then we can reasonably assume that we are in a wave 2, this being the completed impulse. Let me go back to the daily. Still in arithmetic. So to put the whole thing together, we'd be looking at this as the completed 1. Coming down here, we're looking for a 2, 3, 4, 5. Up here, so let's go to the appropriate degree. Let's go to intermediate. Oh, that'll work. Okay, so it's not necessarily bad news. Now, if we look at this in terms of possible targets, well, this is kind of glaring, right? The high volume node here. Pull that over. You can understand why you have that big high volume node here as the market wrestled with this, and we as technicians wrestle with where's the right pivot to be drawing from. If we break and we come down here, it almost doesn't matter, right? So we're gonna confirm that this is a 1 and this is a 2. Now, for you bulls, don't despair. Where would that suggest the 3 is going? Oh, let's just say a lot higher. So let's put that. This is where I started. What you saw when I first had it. If that's the 5 right here, and we're going to come. Well, how does that tee up? Well, where's the highest probability location for a wave 2? Between the 50 and the golden zone. Boom. Now, it's not a foregone conclusion, right? It's just, as technicians, we're trying to develop an opinion about where the market, where it's most probably headed, right? There's no knowing. Nobody knows where it's heading. But with the negative sentiment here, the fear index being, essentially peaking, all of the negative sentiment, depending on who's in your feed, right? There's plenty of negative sentiment, but there's plenty of bulls out there. It's many of the most influential, let's call them influencers, right, in the space, from Raoul Paul to Papliano to to Michael Saylor. Certainly, I mean, this is going to start to challenge Saylor's position, right? I think his average price is in the 60s. We're coming down here. That's going to get challenging for him. He's already started to talk a little bit about, if he needs to, he will sell some Bitcoin. We don't, that's an outcome we're not really rooting for, although some are, right, that are pressing the short side here. But for us as longer term swing traders here, if this comes down for the 2, okay, what would your first thought be? Okay, well, I'm going to have a mighty big channel, pick your pivot. Mighty big channel. With potential targets, well, let's again, out of log scale, where would be our target for the 3? 240-ish? Something along those lines. I mean, again, I'm just standard ops. All right, that's the 1. Let's say we put a pivot in at the 2. Well, anywhere up here up to 250, 240 to 250, depending on how deep we go. And of course, if we go to the golden zone, it lines up, pretty closely if I get it right on that. If I go to the 618, well, we've got a pretty good target up here for the 3 at, let's call it 240. So it's just putting the wave 3 is on hold here at the moment, right? Or it's just being delayed. I don't think it's losing its inevitable destination, but I don't think we're going to get it before the end of the year. Certainly, now we might get started on it before the end of the year, right? If we're going to come down here and do some damage down here, run into all of this liquidity, right? One thing we know, right, this is an area where whales can step in and likely will. And then now we may get a start, right? Maybe we can get a start on the 1, right? If we come out of here impulsively, that's not going to be the 3. That's going to be the 1 of the 3. But there's a lot to happen before we even start thinking about that. Next question is, are we coming down one more time? It certainly looks like we are. So let's go back to that 2 hour. Do we have a start on it? Well, this, hard to argue with that impulse, right? So impulse, correction, impulse. It's a little weird, but it actually looks a lot like the 2. Kind of the same thing, right? If you look at it, which I imagine you guys have all done this, right? It's a good idea to draw them out. It looks like this is what we just did here. And it's got a similar look to this. I mean, they're not identical, but that same premise here that we've got an impulse, a sharp correction, and then we rally off that sharp correction impulsively. So this is what I would be leaning to, looking for targets down here on the edge of this would be 72. We've had that kind of teed up for some time. Of course, you know, again, counts change, ideas change, price action dictates, price is truth, right? Never forget that, right? It doesn't matter what anyone says on Twitter or X or wherever. Price is truth. So it's really all that matters. Okay, so if we come down here, we'd have a clean completion. Again, let's put this back in Elliott speak. 71, 72. 50% right on the edge of it at 69 seems like a reasonable destination here. Now that doesn't mean sit down here with a limit order, although if you're, depending on how you approach your Bitcoin allocation, dollar cost averaging down here, something to consider, right? I, would never. Well, let me rephrase that. I don't trade Bitcoin with leverage for my longer term holdings. I would encourage you to maybe consider doing the same here. This is not a bad place to be if we do come down here, to be adding into your long-term position holding. If you can get it in the under 70, I'm going to be aggressive there. It's you make your own decisions, but we shall see, right? So the next step is, okay, if this is the pivot, we're looking for 5 to come down here, right? So we'd be looking for 1, 2, 3, 4, 5 to come down here. We have a start on it. Now, this is not, remember, market's not obligated to do anything ever, right? It's going to do what it's going to do. We're just trying to get a read on it and see if we can determine an edge based on precedent, based on the confluence, price action we can identify, and path of least resistance, as well as all the on-chain metrics and what's happening with the ETFs and the cash flow and the liquidity and all the things that are influencing that price. At the end of the day, it all just loads into price. All of that, it doesn't matter. All of that is reflected right here. Every known fundamental, every known on-chain metric, every sentiment reading, it's all reflected right there in the price. So if you want to know what's happening with Bitcoin, go to the chart, right? The price will talk to you, right? So there we are, right? It looks like that's where we're headed. Now, could that change? Of course it could change. But right now, it does seem like this would be a very unusual finish. If this were to go 1, 2, and then or could be, you can see the alternate here. It could be, 1, 2, and we're going to go 1, 2, 3, 4, 5, right? So, let's get off of there. If we were going to do that and then start a retracement, 1, 2, well, it would be likely here. 1, 2, 3, 4, 5, and we're going to come out of the hole here. It's going to take some very, very, very big push here going into the weekend of the holiday. Well, there's a whole lot of negatives here that are kind of teeing up. Now, Bitcoin does have a seasonal tendency to rally into the end of the year, but that is not. It's not possible. It's just be quite surprising if we don't come down here, grab some of that liquidity, look for that low, and then get out of there. Okay, shit. That's 28 minutes. Okay, I'll keep this short. Let's just go over to ETH because ETH is in conflict, right? So we have the same kind of thing happening here. Just in this count, just a bit here, based on this price action, it does. So now, Elliotticians, right? Purists may bicker with me here, but it does look like I've got an A, a B, and a C. If we're gonna finish here. What's unusual here is because there's no getting around that impulse, right? That is an impulse. And then this looks like an impulse. Thus, the idea that this chop certainly had strong resemblance to a triangle. So A, B, C, D, E into a B. That's the only count that I can see getting us done down here as we wick the golden zone here. There is actually a wick that goes through the 65, but no close below. And then the same thing. So you would look at that and say, wait a minute. If Bitcoin's got one more run down, because it has the exact same correction pattern, if Bitcoin's running down one more time, how is ETH going to survive that, right? Because they're going to move. Very unusual should for Bitcoin to go down and sweep that low and ETH not to do it. Well, that might have you rethinking this. Well, but the alternate there would be we do it as a WXY. So then you might be thinking WXY, but then this becomes, if that's the X, this becomes the A. That's mighty shallow for the B, right? Just to complete that thought. It would be A, B, C. Oh, come here. Let's get that up. to micro here, right? So this would be if we did it ABC into a W rather than an A, B, C, D, E into an X rather than a B. Well, now I'm looking for an ABC. Well, I've got my A. I don't know that that's the B. That'd be mighty skinny for a B, but it certainly has potential to be a B. It means I'm coming lower for that C to get to that Y. Or I should do it like that. It's the two don't quite line up as nicely as you might hope. What would be very surprising to me is that if this is the low in ETH, Bitcoin's got one more low to go, one more push down to complete that count, and that ETH is not going to follow it. Now, feel free to disagree with my counts. Right? I'm never here to tell you my count is the right count. Right? I'm applying our methodology best I can, best that I see it. This is what we teach, whether we're right or wrong. It's not about being right. Never was. It's always about being profitable. Where's the opportunity? Where's the location here? We can apply our methodology here and find edge. Well, I had some edge here, just because I know an algo is going to fire there. But now you got to put this whole thing back together. I don't think there's any dispute that that's impulsive, and this is the correction. The only question, the only hurdle here, again, I'm out of log scale, is how far that has to go. Now, if I put this in log scale, right? I mean, if you're bullish, like, okay, well, no problem. Here, we'll come down for the C and we'll get that, right? Well, this same thing with Bitcoin, right? If you want to make it look better, put it in log. Oh, wait, well, we don't have to go. So we'll come down here for this, right? So, I mean, careful about that, right? Which is why I'm suggesting, right now, I do your analysis, because you don't want to. If you look here, 1, 2, 3, it's not longer, right? Longer is longer, right? So log distorts to your eye. If we're coming down here one more time. I would. You want to look at it in both, but right now that sure looks to me like it has one more swing to go here, which will pull ETH down with it. Again, you got to go back and forth here. The fact that it's gone so far that you're forced to look at it in log is kind of a mixed blessing, right? It makes the TA more difficult. Now, some people say, well, Elliottians are always looking in log scale. Well, that's not true. Not always. Only when necessary. 4 times the range is pretty much where you got to start looking at it. Okay, so here we'll call it from 48 to 120. 3 times the range, right? You want to be looking at both. But there's no easy answer here, right? It's a little bit of just, okay, well, we're applying the TA best we can. What's the right thing to do here? I don't think there's anything to do here unless you want to take a swing at the short. I'm waiting for that pivot and that first reaction and that first retracement, and then I'm going to go hard going into 26. I will wait. Now, this is me. I will wait. God damn, I never get that on the first click. I will wait for that. If it doesn't happen, right, and we're going to end up doing this, I'll take it here. If this ends up being, right, we get this done, WXY, I suppose you could do it that way. You're going to have to force fit an ABC into this. Okay, well, you could go WXABC. That's likely how we'd count it. Now, how are you going to turn that into an ABC? I suppose you're going to be down to a 15-minute to give it a force fit, which is, I want to avoid those as often as I don't want to force fit anything, which is why I'm ending up here on the other side of this count structure here. But if we had to, WXABC, that's likely how we'd count it. All right, I don't want to go too long here today, right? That's a whole lot of babble here to get us to hurry up and wait, but at least the thought process, hopefully that's useful to you. I think we got to let the price action dictate here. We're kind of stuck here in no man's land. It looks to me like it wants one more down, right? Which would not be bad news, again, as I said earlier. Then I have clarity. I know where I am. I know I've got an impulse that's completing here. So for bears, right, because people always bitch that I never give them a bear count. You want a bear count? 1, 2, 3, 4, 5. That's an A. B. You know where that's going. God, never the first click. C. We're going down way lower. Let's get to a daily. For all you bears, why you would want that? I suppose, I want to buy it lower. Let's get out of log scale. A. B could be higher. B. C. And then the 2 would be over here. It's not unreasonable. A, B, C. I mean, that could go. I've seen people, right? I mean, I've got people talking about in the teens. All right, so it makes a market, right? Feel free to disagree with everything I just said, but if, nothing else, hopefully give you a few things to think about. Okay, guys, I'm going to wrap it there just with the 2 majors here. We'll be back next week for a live stream. TradeDevils.com, right? If you want to dig in and start to develop a skill set here and our methodology, what we teach, one thing you'll find is that we're consistent. Okay, guys, with that, I wish you a good weekend. We'll catch you next week.